Good morning and welcome to Purpose-Driven Finances, where our focus is helping you use your finances to achieve the purpose and plan for your life. And now here's the host of Purpose-Driven Finances, Allan Molina with Serwus Capital Management.
Hey, good morning. This is Allan Molina, your host, Purpose-Driven Finances, president of Serwus Capital Management. How you doing? You were wondering if I was going to show up, didn't you? You're like, I'm so excited to hear Allan and what he's going to be talking about. But folks, give me a call, 434-316-0246, and help you achieve the purpose and plan for your life. Hey, I wanted to, I know you're listening, so you don't need to listen again, but there's so many shows. Go to my podcast. It's literally everywhere. It's on Apple. It's on Spotify, Sirius XM, and all kinds of Pandora. There's a whole bunch of them that are like, I've never heard of them before. Go to Purpose-Driven Finances. Check it out.
So wherever you get your podcasts,
you should be able to find it.
Purpose-Driven Finances.
Purpose-Driven Finances.
With Allan Molina.
And you know what I found out, Rich?
And you replay the show on Sundays as well.
I do, Sundays. I'm a math guy, as you know, and you give me a hard time sometimes. Check this out. Do you know how many podcasts there are in the world right now?
No.
About 4.5 million.
I would have taken the over.
Okay.
Because it feels to me that everybody now has a podcast.
Right.
And they may have no listeners.
Right.
But they sit there with their microphone and they talk because,
right.
I don't want to disparage, but everyone's feels like they're important and they have important things to say. And, we see it on social media all the time. Some dude's screaming
Right. You ever heard of Switch? Or no, Twitch.
Twitch, yeah.
Yeah. And I don't know if you call that podcasting.
Playing video games?
Right, and talking.
Yeah.
Probably not a thing.
Probably not.
But I'm a straight shooter, just transparent, probably too transparent at times. So I was marketed by Podcast SEO.
Okay.
And they were doing all this analysis, and they said, you need to change the author name, and you need to do this, and you need to be on YouTube Music. I'm like, I already am, but that for some reason I didn't catch it. And they found out my ranking. Guess what I'm ranked?
Out of 4.5 million?
Yeah.
I don't know.
You're being nice. You're like, I don't want to go high. I don't want to go low.
I have no idea.
Right. 447,000.
Okay. That's what, top 10%?
Yeah.
Wow.
And he said that because realistically, I've only been doing it for about 5 weeks now.
Mm-hmm. He
said, that's pretty good just for 5 weeks. So, there's nowhere to go but up, really.
And you've been doing the show how long?
5 years. I've been getting emails from people who want me to be on their podcast now, which I'm like, really?
Like as a guest?
Yes. And this one person said, hey, you have a tremendous amount of content, more than most people ever do. And I'm like, girl, you don't even know. I have another 4 years times 52. I have another 200 shows I can put up there.
Like I was saying before, and this isn't to disparage anybody, but there's a guy I know who does a high school sports podcast here in Central Virginia, and it's just, how do you promote it? Who's listening to it? Because I think I've gotten, similar emails like, do you want to, no, I don't want to be on a podcast that,
right.
Not that it's a waste of time, but, the difference here being you with this one and me with No Holds Barred,
right.
We're also putting it on the radio.
Right.
So it's got a bigger audience than just trying to start from scratch and drive up. I've talked to folks who run podcasts in Central Virginia, and they have great setup, studio, the whole thing, but they've come to me and said, hey, how can we maybe put these podcasts on your station, because you need so many hits, so many views, so many listens, whatever, likes, to be able to monetize it, that, it's like without the audience of a radio station, who even knows?
Exactly.
Who even knows?
And you came to me about doing the radio show, and it's not that I think I have something important to say. It's just I think my approach is very purpose driven, and I had a great compliment this week. I was meeting with a really nice couple, and the lady said, "Allan, I appreciate you. You're not cookie cutter, because my passion and desire is to tailor something for people. And if you're not comfortable, let's fix it. If you're not comfortable with what I'm doing, but also if you're not comfortable where you're at, I've had new clients that come over and said, Allan, I was joking with them. I said, you know what? I can just buy you some mutual funds. We can just let it sit. And they were like, Allan, no, I want it to be actually proactively managed. Not perfect, because no one's perfect, but proactively managed in order for us to hopefully do better. And so it's been exciting. But, Rich, what I wanted to do is we had a guest that was supposed to be here, but snow was on the brain. And, that's okay.
Well, the roads are treacherous, Allan.
It's horrendous.
Treacherous.
Yes. But, it's one of those things. And
she must not be from around here.
Yeah, I don't know, bro. It's just one of those things. And but next week we have, unless there's another snow, but 518 will be here next week.
Formerly Patrick Henry Family Services.
Exactly.
Yep.
Jeff Nentz, great guy. Have you ever met Jeff?
I have not.
He's a really just a nice guy. Those people that are nice guys, but they're not, but they're weird.
Yeah.
He's not a weird guy. He's just a nice guy.
Yeah. I don't do well with those people.
I don't know what to do with nice guys who are weird.
I don't know what to do with nice guys.
Exactly.
I feel like I can't be myself.
Right. That's why you get along with me so well. I'm not a nice guy.
Because I'm a miserable human being.
No. What's interesting is, I found your pretend, your real social media, the real Rich Roth. You were kissing puppies and giving out Skittles. And growing flowers.
It's too bad this is just radio because, although you do have the video going, but it's not on me because the look of surprise that must have been on my face because I don't really do social media.
I know.
I've got an Instagram to follow my kids.
Right.
I have a Facebook, which I haven't touched in probably 5 years or more.
Right. Mm-hmm.
And Twitter, I used to just surf and get news and information.
Right.
So
right.
I'm not a big social media guy.
Yeah, I'm having.
And then
to be
a nice guy. I mean, that's just shocking.
You're a nice guy.
No one believes that.
Yeah,
no one.
I know.
Nor should they.
Yeah, exactly. But and so then after that, the week after that, we're gonna have the Blue Ridge Pregnancy Center on and about the good work they do. So excited about that. Hopefully,
is there news in the Molina household?
No, not yet. I am pregnant. No, I'm just kidding. I do go to Chick-fil-A. Now, folks, sit down for this one. Chick-fil-A, they asked me if I'm Pam because I use her app.
Uh-huh.
And I say, yes, I identify as Pam today. Just to be funny.
Does it go over well?
They do. Chick-fil-A, they laugh.
Okay, good.
Because they know I'm joking and,
Now, if you were in a place like Starbucks, they might not find that so funny.
Right. Or they might go, do you need an emotional support room or something? You never know what Starbucks will, but
that's why we prefer Joe Beans.
Exactly, Joe Beans. And but Rich, what I want to, besides us having fun, what I wanted to do is in the beginning of the show talk about the portfolios, talk about the markets, and if you remember back in your day when you were a financial advisor, and I've heard great things about you being a great financial advisor back in the day.
Lying again.
It's hard. Being a financial, it's hard.
It is.
It's hard. When I started, there was like 2 out of 75 that made it. I mean, it's hard.
Yeah, I mean the percentages of people making it more than a year or two,
right,
is really low.
Yeah,
and the big firms really love that.
Yeah,
right, because they'll bring these guys in, and what they want you to do is bring all your friends and family over,
right,
and you do that at first, and you feel good about it, and then you wash out,
right,
and then they have those accounts,
right, exactly. I washed out at Morgan Stanley.
Did you?
And then went to Merrill Lynch and really blessed there, and then Cyrus. But back in the day, the stock market, even the bond market, is a discounting mechanism. and people don't get that it front runs what's probably going to happen days, weeks, sometimes months down the road. And so what's happening is, and a lot of people don't quite get it, because I talk about quads all the time, and my wife doesn't always get it, and she's heard me drone on it for many years. What's happening on a monthly basis, but a quarterly basis next year is growth is going to go up. GDP is probably going to go over 3% on an annualized basis. Inflation is going to be going down. That's a Goldilocks position. Mm-hmm. And so what happened is we had a little drawdown, little bit of, I think the S&P 500 at the worst was down 7, 8, 9%, somewhere in that range. And so what ended up happening is the stock market went down, but then it's going, hey, it's a discounting mechanism in the sense it's looking across the valley. Hey, next year is going to be really good. And so what's happening is we're in a quantitative, we'll talk about that in a moment. So in January, quad 1 for the monthly and a quad 1 for the quarterly. Next year should be rocking and rolling. And so the exciting part is growth over value. And, most people don't short things. They should. It's a great opportunity. Consumer staples, not a great place to be. It's just a tough place to be. Cyclicals, but also consumer-friendly places.
Now, let's talk about shorting for just a second.
Okay.
Can we?
Yeah, I would love to.
Okay. So that means basically betting against the stock.
Right.
There are a couple ways to do it.
Couple ways. Mm-hmm.
Right? You could do an individual stock and short it.
Mm-hmm.
That's really, really risky.
Well, the risk part is if you're wrong, but the other risk that people don't take into account is you have to pay an interest rate to borrow the shares. That's, to me, the biggest risk. I mean, I wouldn't want to short NVIDIA.
So the longer you hold it, the more you pay in interest. Right. And then the other problem is if you go short and the stock keeps going up, you're getting crushed because explain it, right?
Right. No,
explain
you did a great job.
No, but I mean, explain what it means to short a stock.
Right. It's basically to borrow a stock from the broker-dealer and you sell it.
You sell it, and then you have to buy it back.
Right, in order to close the position.
Right.
But it works extremely, extremely well. Remember that ETF that I mentioned 2 weeks ago, BMNR, that was down like 60%? And I kind of joke that it's what you find at a dog park.
Right.
And you collect with a bag. The QPM is long it right now. And you say, why? Because it's down 60% and it's coming back. And so why not take advantage of it, but also the signal? But if you were to short that at 60, all the way down to 35 or 30 or wherever it is, that is a nice return on your money. And so shorting is something that what ends up happening is that is generally high-end money management.
Right.
It's not your normal.
Yeah, I mean you're kind of talking hedge funds and stuff like that.
Right. And there's even mutual funds. There's ETFs that go long and short. It's just the biggest issue is there needs to be a process, a huge discipline of buying and selling. And what I have found with most firms is the buying and selling process and discipline. You either hear about it or you don't. Most of the time, you don't really hear the process.
I said it was really risky.
Mm-hmm.
And the more I think about it, the real risk is like if you buy a stock, right? You buy a stock, pick whatever stock you want,
right?
And it's at 50.
Mm-hmm.
Say you buy 100 shares, that's what, $5,000.
Right.
So you spend $5,000 on this stock. If it goes out of business, you lose your $5,000.
Right.
If you ride it all the way down.
Mm-hmm.
But if you go the opposite way and you borrow to short a stock, it can just keep going up.
Right. Now,
so the point being is you don't have a set amount of money you can lose.
Right, but that's when you have a disciplined process.
Right. I understand that.
Right.
But what I'm saying is the average investor who decides, I think this thing's going down and I'm going to short it, you can really get in a lot of trouble because when you buy a stock, you can only lose what you put into it.
Right.
But if you short a stock,
right.
I mean, if you short a stock at 50 and it goes to 250,
right, you're hurting. You're hurting.
Because you got to buy it at that price.
Right, you do, and that is,
and that'd be the equivalent, just to follow through.
Right.
If I'm right, that'd be the equivalent of. So if you shorted a stock at 50 and then covered your short at 250,
that's 25,000.
That's the equivalent of buying it at 250 and selling it at 50.
Right. Mm-hmm.
So if you look at it the other way, I mean, so you can get hurt.
Right. And the issue,
and that doesn't even factor in the interest you were talking about.
Exactly. And the issue there is if you have a disciplined process that is legitimate on why you buy it and why you sold it. I used to have a client. The reason I say I used to have a client is he died, went to be with the Lord, and things such as that. Great guy. He would manage his portfolio from the Lynchburg News in Advance. He never sold a stock. He just bought from what he saw in the news in advance. He did well. I mean, he invested like over 50 years. So,
well, I mean, the market's going to be good.
Right. He did well.
And, if you're picking relatively safe stocks, blue chip type stocks.
No.
Oh, no.
It was all over the place.
Okay.
He had some things that weren't really blue chippy and some that were. He had AEP and Dominion, but he also had these up and coming technologies that were, we talked about it before. But the problem is he didn't have a strong sell discipline. And what I have found with a lot of advisors, but also a lot of people who run their own money. What I mean by run their own money, not like
you manage.
You manage. I should say, manage their own money. Is their sell discipline is very poor because they hear on CNBC or Fox News Business or their friend in the golf course, hey, you need to buy this stock or this. I'm going to go buy it. And then, well, when do you sell it? Your friend on the golf course isn't going to tell you. And CNBC isn't going to tell you.
And your friend on the golf course probably doesn't know.
Right. There was an advisor. I'm not going to say who it was or what firm. You know who they are.
Please don't.
I'm not.
Don't get yourself in trouble.
I'm not. But he told me. He says, Allan, I got an insider at a local company who's an executive, and he tells me what's going on, and that's what I buy. You know who it is.
I do. Okay.
And I'm like, bro, isn't that a little – I didn't tell him this, but because I was new, I was like, that's orange jumpsuit places. And I'm like, I don't want to go there, bro. So I distance myself. But that kind of information is not legal. And if you think you get a hot tip, watch out because you don't want to act on it, or maybe publish it on Facebook, then act on it, or somewhere public.
So can I throw a disclaimer in there on that?
Yeah.
Don't do that unless you're in Congress.
Right, exactly. Exactly.
And then apparently it's legal.
It's legal. Exactly. But the other easy way to short a stock is buying an inverse ETF.
Mm-hmm.
That's easy.
And that's safer.
It's a lot safer, and it's a lot cheaper. Because I think like the SPY, which is the S&P 500 ETF, largest ETF out there, I think its expense ratio is 4 or 5, 6 basis points. That's nothing. I think in order to short the S&P 500, it's like 90 basis points for the whole year. And if you only hold it for 2, 3, 4 weeks, that's nothing if you do it well.
And if you're doing it with an ETF, it's a basket of stocks.
Correct.
So it's not just one stock where you're all in on that one company.
Because imagine if someone was like, I'm going to short this biotech that isn't doing very much. And then they come out with the
cure for cancer.
Yes. Ooh, that's going to hurt. Right. Now, I've never dealt with them because I'm scared of them. But futures. Have you did you ever do anything for futures?
No, I never really even did anything with options. Yeah. I know you've done stuff with options.
Yeah, my first book was on Black-Scholes method of option pricing. That was the first book I ever bought.
And options is another thing where you can If you don't know what you're doing,
right, you can lose your shirt.
Please be careful.
Exactly. But the thing, this is just this ancillary story, because we don't have the person, so we're just talking. I know of a situation in Virginia, and I'm not going to go too deep because I don't want people to know. It wasn't my client. I was friends with the advisor, and the guy would do futures in coal. Well, the problem with futures, if it goes against you, not only can you lose your account, you can lose your house. I mean, it gets bad. Not like stocks, but futures, it's bad. It doesn't even have to go to zero. It can be, because it's so leveraged. He had to bring in $1 million check.
Wow.
Because his futures turned against him. So
did he do it?
Yeah, he brought it in. It wasn't anything major.
Good for him.
He was loaded.
Yeah, I guess.
He was loaded. Very loaded.
For most of us who are sitting there going, hey, bring me $1 million tomorrow.
Right.
Like, what?
Right.
Be on the phone with Bob Chapman at Bank of the James. Bob, I need a load.
Hey, we can give you 100,000, but $1 million ain't going to happen. But watch out. Go to Quad One, and if you're curious about your portfolio and you're saying, hey, Rich, I've gotten a lot of clients. Their advisors haven't changed their portfolios over the past 4 years, and I know some people are like, Allan, you change it too much. That's just the way I do it. But if you don't change your portfolio in 4 years, there's some changes that have happened since 2021. So, folks, give me a call at 434-316-0246, and let me do that. Rich, let's go to number 2. The Fed is probably going to lower interest rates again, a whopping probably 25 basis points.
Ooh.
Yeah, big deal. Polymarket, which is a place where you can bet on all sorts of things. There was... It's really, who's the next Fed. Mm-hmm. There was a technology company, I don't remember who it was, but they were on Polymarket bet of the words that he would say in phrases. So he just read the list and kind of blew them up a little bit. But it's very interesting on the Polymarket, and I think it's a 90% that they're going to lower interest rates. Everybody knows that. But one thing that's interesting is quantitative tightening is done this week. It's over. And what that means is they're no longer reducing the liquidity in the markets. So I'm expecting the markets to heat up over the next year to create a bubble. And you want to be in a bubble. You just want to get out before it pops.
Right.
Or as it pops, you want to get out.
Right.
So it's going to be exciting. And so it's going to really pump up growth. Bonds, I would expect the long-term bonds and the short-term bonds to go down in yield. The biggest issue we have is the health of the U.S. government and, our deficit and things such as that. Another thing, number 3 is gold is losing steam. It went up, but the thing that's very interesting that's happening, Rich, is copper, aluminum, steel are doing a whole lot better. And the reason being is the economy is expanding. But what's going to be interesting is China is entering a Quad 4. And China, the number 2
we know
economy.
Quad 4s are not good.
Right, dumpster fires. And so America's going to Quad 1, so it's going to be very interesting. And so I have in the portfolios, I've just put the pedal to the metal, to really try to garner as much upside in the American stock market. I would probably short China through an ETF, not, individual stocks on the Hang Seng. I'm not going to do that. Then one thing I wanted to do is I've been using Chat GPT. I've been using Gemini, thank you. Appreciate it. And Copilot. I've even messed with a fourth one. But I wanted to take the portfolio of Quad 1 and put it in there. I say, optimize it for me. And it optimizes it from whatever you put into it. And one of the things that does really well in Quad 1 is uranium. Okay, if you were to pull up a chart, you'd be like, "Wow, that's zooming." And just where we are in the world right now, but also, so one of the one of the AIs came back. I said, "I want you to take these 20 securities," and I didn't give it the percentages that I designed it to be. And I said, "I want you to come up with the optimized portfolio." It did 35% in uranium.
Wow.
And you're like, "Allan, why are you bringing this up?" The reason I'm bringing it up is just because you use AI doesn't mean it's accurate. I mean,
so what's that? Just using historically these 20 stocks. If I had a portfolio of these 20 securities,
right,
because uranium's not really a stock, but these 20 securities in a quad one market, how would they best
exactly perform?
And it's looking back.
It's looking back, and what it does is it looks at the returns, but also the standard deviation, and it's looking at the Greeks. There's so many of them: upside, downside, market capture ratio, alpha, beta. There's all sorts of them. And what it did is it said from a risk return portfolios, put 35% in uranium. You talk about a lawsuit. If a financial advisor did that for a client, unless the client was like a uranium farmer or something, is there uranium farmers?
I don't know.
I heard there's a lot of uranium in Pennsylvania County. But that being said, the reason I share that is if you're using AI in order to design your portfolio, you need to have some knowledge about portfolio construction and real world things, and real world experience. When I say things, that's a very good.
It's very descriptive.
They're very descriptive. But when I say things, it's the totality of portfolio design. That just because AI says it and it sounds good from a mathematical perspective does not mean it's what you should do. I was surprised because I had 20 securities.
Wait a second. Are you saying that you shouldn't do everything that AI tells you to do?
Well, yeah, I think so, Rich. I think so.
Okay. It's a good lesson.
That's a good lesson. But there are people out there who are.
I know. I believe
they are so fine-tuned to AI and been sold that bill of goods that they don't check it. Because 35% in uranium is just no, bro. Is it a good return if it goes well? Oh yeah. But that's like right now. Bitcoin is down. I'm gonna put 35% in. No,
I mean that almost feels like you're just as good off going to a casino.
It is, yes. So I don't even know how much time we have, but you know what? Is it time for a break? Or
no, it's not time for a break. We've only got about 2 minutes left.
Really?
Yeah. Yeah. Do you want to talk a little bit about purpose-driven giving?
Yeah, let's do that. I had no idea how long we have. I enjoyed our conversation. We should maybe do this more often. It's fun. It is talk show.
It's fun.
Sometimes I script it too much.
And we got into some different things, taught people about shorting. And
exactly. But you're in giving. Something I learned this week is you can actually take, right now in 2025, $50,000 out of your IRA. And from the research that you need to talk to your CPA. Talk to your CPA. Don't get upset if I don't know everything a CPA does. But from what I understand, you can take $50,000 out of your IRA and move it into a CRUT or a CRAT. You say, what's a CRUT? Charitable Remainder Unit Trust. And from what I understand, it's from the Secure Act 2.0 that it came out in. And from everything I've read and understood from the tax law is it actually bypasses taxes. And so the husband can do 50 and the wife can do 50. And so my suggestion is go check this out because CRUT, it will actually be to your benefit and create an income stream. Hey, give me a call this year about tax loss selling, RMD into a QCD. Give me a call at 434-316-0246. Go to my website, servuscm.com. And this coming week, I got a new website. Check it out, servuscm.com. Have a blessed weekend.
Returns for illustrative purpose. This is not a suggestion to buy, sell, or use a platform. Only will a suggestion occur after a meeting to determine goals, risk tolerance, and time horizons. Investments in